Hi, if your money is just sitting down in the bank and not doing anything for you, you're not earning from it, you're not growing with it, my dear, you're doing a very wrong thing. In fact, you're in a long thing. And I'm here today to bring you good news on how to change that narrative. I'm Sylvia, and I'm very happy to have you here. We discuss money related things, different ways to move our money forward. A lot of people are very interested in making money these days, but because of they've been burnt and fear of the unknown, they'll just rather put your money in a savings account, which might not yield as much interest. And remember that for most savings accounts in Nigeria, you're supposed to get about 4 to 6% interest on your money, especially within a month, when you don't withdraw more than 3 times. But now the problem is that people now use those accounts as their expense account, and you see them withdrawing over and over and over again, and with this they will not even be able to make any interest at all. Well, today I'm bringing you one low risk and safe method of actually making some money, and that is mutual funds. So what are mutual funds? Mutual funds are basically a money pool. Just imagine you and 1,000 people, lots of people, are putting your money together in a pot. Now those pots are now managed by professionals. Put the money inside that big pot into things like stock, like bonds, like commercial papers, low risk investments that at the end would return you a good interest depending on how much you have put into that pot. I'm trying to buy shares in a big company, and sometimes you just, by doing that, you take on the full risk of that might come with buying into those companies. Investing in funds help you to diversify your risk and helps you to also earn more when you have done this investment, because you're putting your money into a bucket that can get you different things that is already within that pocket. For instance, as even you just invest like 10,000 naira, for instance, into this pot, and then 1,000 of people, 1,000 of us also invest 10,000, 100,000, 1 million. People are just investing a lot of money as well into this pot. So what now happens is that you get diversified portfolio, because the fund managers will take this together and invest in something else and then give you like shared benefits and shared returns from what your money can make in this. So in short, mutual funds is just equal to accessible, affordable, and managed investing. So with this, you can get these 3 things in a whole. Now, what are the benefits? Why do people love mutual funds? The first one is diversification, because instead of putting all your eggs in one basket, you're able to put that egg in a basket of different things, so you're able to spread your risk across different assets, and that's where the diversification comes in. The second one is professional management. So with mutual funds, it's the experts that manage and research and plan on where to actually invest money that you have put into this pool into. So it's not your own to make the right decisions. This is just to put the money, and the professionals will take it off from there. The third one is liquidity. You have access to withdraw your money most times from a mutual funds account. So it's very, very accessible. There is no long-term required planning or a very strong hassle for you to withdraw your money. So the money is very, very liquid. In split seconds, your money can be converted into your account number, and then you can just make your withdrawal instantly. The fourth one is accessibility. You don't need a lot of money to start. That's why people really like it. With as low as 5,000 naira, 10,000 naira, you can actually start. So we don't have any excuse. Start making your money now. Start investing. I'm also going to have a link down below for you to start. So start immediately. And the last one, the fifth one that I will say here, is affordability. Right, I had just mentioned that you can actually start with 5k depending on the platforms. You can also buy in fractions. You can buy fractionally, right? So with this, there's no stress, there's no pressure to buy a lot of it or to have a lot of money before you can start. So you can start immediately. Basically, it's a very good entry point for beginners. It's also very good for very busy people that don't have time to start monitoring and tracking the market, but you also want to get some form of passive investment, passive interest from your investment. Mutual funds are very, very helpful. Let's talk of the types of mutual funds. It's important to do this because not all funds have the same goals. Not all funds are tracking the same thing. Not all funds have the same goal. Not all funds have the same risk level. So it's important that you know what the fund is about, and then it can advise you on how to move on from there. The first one is your equity mutual mutual funds. Now, equity mutual funds usually invest in company stocks. You have higher risks and also higher rewards here. Mostly they invest for the Nigerian stock, they invest in the Nigerian Stock Exchange. So stocks that are company shares that are very certain and they understand what and how the shares come about. So yes, equity stocks, like the name equity. So it's just the stock, the shares from a company. That's where the pool of funds is usually taken to. Second one are the bond mutual funds. So they are more like the fixed income funds. They usually invest in things like government bonds, corporate bonds. They are usually low risk and they are lower risk than equity funds. And then also sometimes they are also of more returns than equity funds. The third one is the money market mutual funds. A lot of Nigerians know this as well. Here, the monies are invested in very safe short-term securities like treasury bills, commercial papers, and they're really of very low risk. And sometimes a lot of times people want to use this for their emergency funds because of the accessibility, the interest rate, and of course I had mentioned it is very low risk as well. The fourth one are the hybrid funds. So the hybrid funds are like a mix of the equity fund and the bonds. So the risk is diversified here. It's not so risky, it's not less riskier either. The returns also are not as high and neither are they as low, but they're very good. They are more like on a medium scale for investment. So you have a mix of both of them. It's a blend of equity stocks and a blend of the fixed income funds as well. Fifth one is the index funds. Index funds are usually specific to a particular index. So they track, let's say for instance, the S&P 500 tracks the top 500 companies in the US market. And so it is specific to that category. So they are mostly low cost, they're mostly passive, and they're usually good for a long-term kind of investment. The sixth one are the sector bonds. The sector bonds are like industry bonds. So they are specific to a particular sector or a particular industry. For instance, the energy industry, the banking sector, technology industry. So you have stocks, you have funds in this space. And then, so the thing is, it's risky sometimes. It can also be very profitable. But you know that when, assuming you're like in the AI sector, in the technology sector, and something bad happens in that sector, everything, like your money is going down the drain totally. And of course, if something nice happens to it, you're also going to make a lot of profit at the same time. So it is really very risky. It's not a very good diversification approach, but yes, the sector funds are also very helpful in its own kind of way. How can you invest in these mutual funds? The first one is just to know your goal. Like, really, why do you want to invest? You know the reason for this investment is going to advise you on what kind of mutual fund you're going to go for. If you want to buy a house, if you want to say save for a rainy day, or you just want to have like an emergency fund put out somewhere, the goal itself is going to help you and advise you on the kind of fund investment you're going to go into. The second one is to know your risk appetite. How is your risk appetite? If you're risk averse, or if you're very prone to risk, or you're a risk taker, this is also a very good way to suggest the kind of investment you're going to do. So if you don't like risk at all, money markets mutual funds are usually a very safe space because they are short-term and very low-risk investment security funds. So yes, money market is very helpful for you. But if you have time, you're very young, and you want to just explore it, you don't mind the ups and downs, you can do equity funds. Equity funds, because they are investment in the stock or the shares of the company, there are some very high volatilities that could come into play, and sometimes volatility could be positive, which you're happy, and it might be negative. You might not be so happy, but you have some time as well, especially if you're young, to recover. Third one is to pick a mutual fund provider, right? In Nigeria, you have things that you have them like Stanbic IBTC Asset Management, ARM, you have the FBN Quest, you have the Mary Stern, you have the Cardinal Point, right? So, and of course, globally, you have Vanguard, you have Fidelity, BlackRock. So, yeah, just pick one and work with them, at least for starters. The fourth one is to open an account. So, it's usually very seamless. It's just like opening your bank account, and then so you have to fill your KYC, and to fill your customer you need IDs and documentations about yourself. Then when you're done with all those clarifications, you now move on to fund your wallet. I've already done a video on the Stanbic IBTC Mutual Fund, so I'm going to put the link here, so just use it, and it's very, very clear. And of course, I'm available to answer any of your questions that you might have, but it's really very seamless. And right now, Stanbic has also done something good, that you have a dedicated account number for yourself, unlike the group one that you just send and then indicate your code. So this time around, you have your own account number that you can just transfer money to yourself seamlessly, and it just goes very well. Fifth one is that you have to start small. Just start from where you are. You can start with 5k, like I had mentioned, because I know that some of these platforms actually start with 5k. Stanbic, Afri Investor. So yeah, there are different applications that you can actually do this on. So yes, start with 5k, start from where you are, and just continue at it. And then of course, the last one is monitor but don't panic. Please don't check your wallet every day. These funds are usually medium to long term kind of investment, so don't check your wallet every day. You can check quarterly, you can check monthly. Quarterly is actually better. Please do not check every day, so that you don't create some kind of panic. So there you have it. I've been able to give you some good details about mutual funds and why you should invest in it. So let me know, are you going to be doing the money market mutual fund, or will you be doing the equity kind of fund? Whatever it is, let me know, and let me know your why. Please remember that your goal is very important. The reason why you want to take this step is very important. So let's have those reasons. I'm available to answer any of your questions. And if you've not subscribed at this point, my sister, this is a good time, my brother, to subscribe. I'm Sylvia, and I cannot wait to see you in my very next video. Bye. See ya.